Welcome to the Pro Ticker Deep Dive. Today, we're diving into a metal that's basically the nervous system for the whole global economy, copper.
Yeah.
Yeah, for decades, it was just sort of there,
Yeah.
reliable, quiet, doing its job, connecting grids, homes, tech. But now, well, it's anything but quiet. It's right at the center of this huge shift happening in commodities.
Absolutely. It's really changing, isn't it? Copper's moving from just being, another industrial metal that goes up and down with the economy to something genuinely strategic. We've heard whispers about shortages for years. I mean, forever, it seems. But the big question now, the one that jumps out from all the analysis, is this. What actually happens when the world's most essential industrial metal suddenly runs short? And not just a little short, but profoundly short. And that shortage looks locked in for maybe a decade.
Right. And the evidence we pulled together for you today really suggests that this copper deficit everyone talked about,
Yeah.
it's not coming. It's
Yeah.
here. It seems like it's properly rooted itself in the market now, structurally.
Right. Our mission today is basically to walk you through that evidence, show you why this looks like a real turning point, one that could honestly reshape the global economic balance, commodity prices, everything, really, for years to come. The key thing, the main takeaway, the market's completely flipped from surplus to a pretty entrenched shortage. And it's happened because of this massive collision years in the making. A decade of, let's say, severe underinvestment hitting record demand head on. This looks structural. It's not just a blip.
Okay, let's unpack that. Let's start with the supply side. If there's a real shortage, why? Why is supply struggling so much? Like you said, it wasn't sudden. This whole squeeze, it seems like it was basically a decade in the making.
Yeah, you really have to look back at the psychology almost. The big factor was what the industry calls capital discipline. Remember the last big commodity boom, early 2010s? It ended badly, lots of wasted money, angry investors. So the mining companies, they slammed the brakes on spending. It was a reaction, Protect margins, stop burning cash like they did back then.
So wait, a decade of being careful with money, focusing on dividends instead of digging. That leads to a crisis now. That's a huge time lag.
It's massive. And that careful spending, that decision, it's now hitting physical reality. Your big producers, Chile, Peru, they're dealing with old mines, deep mines, expensive to run. They're past their peak, really.
And the quality of the rock itself, the ore grade,
Yeah.
that's falling too, right? That feels like a huge factor people sometimes miss.
Oh, it's absolutely vital. You can't gloss over that. Lower ore grades mean you have to dig up and process way, way more rock just to get the same amount of copper out. Think about the knock-on effects. More energy needed, more water, often in places already short on water, more waste rock. It drives up costs, increases environmental headaches, and makes the whole thing riskier politically, too. It squeezes supply just like a strike would.
And the forecasts, they look pretty stark when you put it all together. Global mine supply growth, it's expected to be super sluggish, like barely 1% a year for the next few years.
That sluggish growth, that 1%, it really underscores the long-term problem here. We can't stress this enough. Even if copper prices go through the roof tomorrow, it can't fix this shortage quickly. Building a new copper mine, from finding the deposit, doing the studies, getting permits, actually building it, you're looking at 8 years, minimum, usually closer to 10, sometimes more.
Wow. So we're literally paying today for the decisions not to invest back in, 2015, 2016, which means significant new supply probably doesn't really hit the market until the early 2030s, no matter the price now.
Right.
That's a long runway for a deficit.
The lag is just enormous.
Okay, here's where it gets, for me anyway, really interesting. If supply is about a decade of neglect,
Yeah.
the demand side feels like maybe 5 years of just radical acceleration. Supply is crawling at 1%. Where's all the copper going? Why is demand spiking?
Yeah, the demand story is now, it's completely dominated by the big global transitions. Electrification, decarbonization. And these things seem to be happening faster than people thought. The world's electrifying like crazy. And every bit of that needs copper. Lots of it. Power grids, renewable energy installations like wind and solar farms. Huge consumers.
And EVs, of course.
Yeah.
The electric vehicle revolution. We know an EV needs way more copper than a regular gasoline car, like 3 or 4 times more.
Easily. And then you've got traditional infrastructure spending, which is back in a big way. The US, Europe, they're pouring money into modernizing their power grids, miles and miles of new cables. Plus, you look at emerging economies, India especially. Rapid urbanization. That means construction, wiring, massive copper demand.
But then there's the new thing, the curveball that wasn't really there last time around. AI, artificial intelligence, you have to factor in the copper needed for all these new AI data centers. I still struggle to get my head around that one.
Oh.
Why do data centers suddenly need so much more copper for AI?
It's basically two things, speed and heat. AI needs incredibly fast processing. That means tons of high-speed wiring inside the data centers, and copper's the best for that conductivity. But maybe more importantly, those powerful chips, the GPUs that run AI, they generate immense heat. So you need serious cooling systems, often liquid cooling. And guess what's used in the pipes, the heat sinks, all the wiring to manage that heat? Copper. Every single new AI data center is just a massive new source of copper demand.
Okay, so you stack all that up. Electrification, EVs, grid upgrades, India, AI, you see this huge mismatch. Demand just accelerating. Some sources say it could rise almost 3 times faster than that measly 1% supply growth. The numbers just don't add up.
Right. So let's connect that supply-demand picture to what's actually happening in the market. And the first place to look, the real red flag maybe, is inventories.
Ah, yes, the inventory levels.
Yes.
This is where it feels really precarious right now.
It really should keep people awake at night. If you look at the copper stocks held in the major warehouses, London, Shanghai, New York, they plummeted, historically low levels. We're basically holding inventory that covers barely a week of global consumption.
Hold on, barely a week. What's normal? What's a comfortable level historically? Is this like the mid-2000s boom risk?
We are way, way thinner now. A comfortable cushion used to be closer to, say, 5 or 6 weeks of supply. So when we say barely a week, it means we're operating hand to mouth, no buffer, zero margin for error. Any small disruption, a strike in Chile, a storm hitting a smelter, even just a big fund deciding to buy physical metal, it could send prices haywire almost overnight, a real scramble.
And we're seeing the price start to reflect that anxiety, aren't we?
Yeah.
Pushing back up towards that, what, $4.30 level? Seems like the big traders are finally acknowledging this isn't just temporary. It's structural.
Exactly. And if you look ahead, given that decade-long wait for new mines, the potential for prices is pretty significant. If these deficits keep going through, say, 2026 and beyond, the analysis suggests prices near or maybe even above $5 a pound aren't just possible, they're actually quite probable. We could definitely challenge those old all-time highs, maybe go past them.
And the wider economy is sort of helping too, right? The weaker dollar.
Yeah, the macro tailwinds are there. As central banks outside the U.S. maybe ease off tightening, the dollar softens a bit. That makes dollar-priced copper cheaper for buyers using other currencies, so it nudges demand up even more. Plus, you see it in investor behavior. Hedge funds, big institutions, they're building up long positions, betting on this multi-year squeeze. That adds some speculative froth, sure, but it also reinforces the whole bullish setup. Copper is becoming a key way to play the green transition theme. But look, while the bullish case is strong, it's really important, as we always say, to weigh the opportunities against the risks. This market is shifting dramatically.
Okay, let's do that. Opportunities first. Who wins most directly from this scarcity, beyond just holding the metal?
Well, the most obvious winners are the low-cost copper producers, especially if they operate in politically stable places. As the price climbs, their profit margins just explode upwards, exponentially. And like we said, copper is so tied into the green transition story that makes these companies really attractive to big money, the ESG funds, you know?
Right. But let me push back on the risks for a second. If prices do go to $5 or higher, driven by this essential decarbonization demand,
Right.
doesn't that kind of override everything else? What could actually derail this? What are the real headwinds?
That's the key question. I think the biggest question mark, the one that always lingers, is China. Specifically, their property sector. If China's construction market has a sharper downturn than people expect, that could definitely put a dent in near-term demand. China just uses so much copper.
Okay, China property. What else? Substitution. If copper gets crazy expensive, won't people just use something else?
That's a factor, definitely. Maybe not a game changer, but a headwind. For some uses, especially lower tech stuff, industries might switch to aluminum. It's lighter, cheaper. It wouldn't solve the main shortage, but it could shave off some demand at the edges. And the other one is recycling. Scrap copper. If prices shoot up really high and stay there, recycling becomes super profitable. So you could see scrap supply ramp up faster than expected, which would help ease some of the tightness.
Makes sense. Okay, for people who watch the charts, the technical signals, what are they saying? Is this rally looking solid technically or just momentum?
From a technical perspective, it's looking pretty textbook, actually. Prices clearly broke out of that long sideways channel, that $3.50 to $4 range they were stuck in. And since then, we've seen higher highs, higher lows. That's the classic signature of a sustained uptrend building.
And the indicators are backing that up, moving averages and things.
Absolutely confirming it. Momentum is strengthening. And importantly, both the 50-day and the 200-day moving averages are pointing firmly upwards now. For chart watchers, that's often called the golden cross, the shorter-term average crossing above the longer-term one. It usually signals that the bullish momentum is taking hold structurally for a longer run.
So let's nail down some key levels for listeners. Where's the next hurdle, the resistance? And where's the floor, the support?
Okay, immediate resistance seems to be right around $4.35 up. If we push decisively through there, the next likely target is up around $4.65. After that, you're looking towards the big psychological level, the old highs near $5. On the downside, if we see pullbacks, strong support seems to have formed between $3.95 and $4. That zone has repeatedly brought buyers back in.
So wrapping it all up then, copper. It's changed. It's not the boring, reliable metal anymore. It feels like it's become the absolute strategic heartbeat of the modern economy. Is that fair?
I think that's exactly right. The analysis points to this really profound contradiction, almost alarming, really. Everything we want to build, EVs, smart grids, AI data centers, the whole green transition, it all utterly depends on copper. And yet, the world basically neglected to invest enough over the last 10 years to actually produce what we need. And it's going to take probably another 10 years to fix that supply cap. It feels like a permanent rebalancing, not just a cycle.
Yeah, it's about recognizing that long-term structural failure, understanding supply is just mathematically tight, demand is structurally rising. So the path of least resistance for the price just has to be higher for a good while yet.
So maybe a final thought for you to chew on. Think about those ripple effects, this decade-long supply problem. If copper does get significantly more expensive or just harder to get hold of over the next 5, 7, 10 years, how does that scarcity, that higher cost, actually impact the speed, the cost, the feasibility even of hitting those big global decarbonization targets? It really raises a fundamental question about the true cost of building that green future.
See you all in the next Pro Ticker Deep Dive.